Coming up on the SBS On The Money podcast, the share market tumbles as the jobless rate falls. We speak with the CEO of Xero and take a closer look at Orica's profit results. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Thursday, the 13th of November. It's an extended edition as we speak with the CEO of Xero, Sukhinder Singh Cassidy, about the profit results for the accounting software group, along with her plans and advice for using AI. It's on a day where the Australian share market fell, the S&P ASX 200 down 0.5% to 8,753. That's as the Bureau of Statistics said Australia's unemployment rate fell from 4.5% in September to 4.3% in October, easing fears of a faster than expected loosening of the jobs market. While the participation rate remained the same, the number of people employed rose by more than 42,000, with full-time work driving the gains. Even youth unemployment fell from 10.6% to 9.6%. And it likely means the Reserve Bank can keep interest rates on hold for the foreseeable future and allow it to monitor inflation more closely because it's been re-accelerating recently. Late today, even economists at NAB became the latest to change their forecasts, saying the Reserve Bank is now done cutting interest rates this cycle. For more on her take, I spoke with Devika Shivadekar, an economist at RSM Australia. Devika, what does this labour force report say about the jobs market? Because there were fears of an unexpected sharp slowdown in September.
Frankly, I'm not surprised that unemployment rate has actually dipped in October. The very simple explanation is, just as we enter the holiday period going into December, most often than not, businesses actually ramp up their hiring in the months leading up to the holiday period. So it was expected. In fact, it's one of the seasonal elements that the jobs report in October and November is likely to be tighter. So unemployment rate is likely to be lower compared to what we saw in September because more people start newer jobs despite the participation rate remaining constant. So it's not a surprise.
Who or what are driving those gains?
All of them mostly driven by full-time. We saw that part-time employment actually fell, and most of that the dip in part-time employment was actually led by women getting out of the part-time workforce. So women have been at the center of driving the changes in the labor market, and it's entirely being driven by full-time employment, people joining newer full-time roles just before businesses shut for the Christmas period.
And I guess the key question now is, what does this mean for the RBA when it looks at deciding what to do with interest rates? Because the RBA does have that dual mandate of achieving or close to full employment while keeping inflation low. And we know that inflation has re-accelerated recently. So what does it mean for it?
We did see that unemployment rate picked up to 4.5% in September and it dipped to 4.3% today, but none of that really mattered during the November meeting. RBA held rates steady because it's concerned about inflation reaccelerating. Having said that, I think the RBA is going to be extremely cautious and very careful in deciding what to do going forward. So we should not expect rate cuts anytime before Feb 2026 at the very least. And I see risks more firmly towards interest rates actually being pushed further back than being brought forward because inflation continues to remain a very big concern. And if we were to factor in the labor market tightness as well, we always have this at the back of the mind that a tight labor market means wage pressures, and wage pressures are key to driving inflation. So putting all of this together and also looking at the November S&P forecast, which lean quite hawkish, to be honest, we can expect the RBA is not in the mood to cut anytime soon.
That's Devika Shivadekar there from RSM Australia. We'll get the market reaction in a few moments, but first to accounting and payroll software provider Xero. It posted a 42% surge in half-year net profit, while net subscriber additions fell on the same time last year, it is making more money per user. The company recently paid billions of dollars to expand into the US and has invested heavily in AI. To tell us more about the company's results and how she is using AI, along with advice for small business, I spoke with Xero CEO Sukhinder Singh Cassidy. Sukhinder, record half-year profit, revenue growth plus profit margin above that closely watched 40% mark. How would you describe the way the company has been operating in that first half?
I would say we've been operating very consistent with what we promised our investors we would do on Investor Day, which is a nice balance of top-line growth and profit, a very focused strategy on our 3x3 markets, and our three big jobs to be done, payments, payroll, accounting. And I would say a read-through for us on an exciting opportunity with AI, which is translating into new features we're launching for customers. And then, of course, Melio, the acquisition of Melio to turbocharge the US.
I want to talk about those two things in detail in a few moments. But first, total subscribers are up 10%, but net subscriber additions down on the previous period, yet you're making more money per user. What does this say about the stage of growth that the business is in and where you'll be finding new opportunities?
Yeah, you're hitting the key thing that we're trying to balance, which is volume of subscribers and value per subscriber. So I think when you look at the size of the business today, I mean, it's a substantively large business. So adding 10% subscribers, up to 4.6 million, we think is still a meaningful subscriber addition number. But we do care that we're getting subscribers on the right product. And increasingly, it's about selling, the value of Xero, not just trying to get sort of subscribers at all costs. And that's been the subtle shift in the business over the past 2 years, and we're really pleased with that shift towards value plus a focus on continuing to gain share.
You mentioned your acquisition of Melio in the US. It's the largest in Xero's history. I've seen it described as the boldest large cap deal this year by one fund manager. Are you starting to see any benefits yet, even though it's early days?
Well, we're excited that we're not even 30 days post-close, and we have announced that the integration of Melio into Xero will happen this December, meaning the product will be available inside of Xero as of December, and that is a big first milestone. So we are happy with the early integration progress. But I think overall, we think it is a reasonably sized bet on a strong US accounting product, a stronger US accounting product over the last couple of years that now wants to add some heft in the ability to add sort of more jobs to be done that you can do right on the platform. And so I'd, remind everyone that while Melio is a big bet, at the group level, we still believe that we can not only hit larger scale in the US, but be rule of 40 and above again by fiscal 28.
I know when I ask this next question to many CEOs, they basically say, hey, we don't really comment and look at the share price too closely, but I'm going to ask you anyway, right? Does the share price reaction worry you? It's down around 6% today, and it is down 20% so far this year.
No, it doesn't worry me because I believe we're consistently doing the things that are important for value creation and what we said we would do to the market. So we're going to try and be a consistently strong performer. That's what we demonstrated in this half, last half, the half before that. So I think our job is just to continually perform. And then, we believe long-term shareholders really believe in that kind of value creation story.
I think a lot of people would be really keen to hear about your view on AI. You see AI as a significant opportunities to innovate and invest to unlock value for customers. Can you tell me how so and what you're doing in this space?
Sure. Well, first of all, remember, we are a system of record for small businesses. We do their core accounting job. And if you think about core accounting, it's a very task-based exercise. We also help accountants and bookkeepers do that job. And so a good example of AI on Xero, which we call our super agent is called Jax, just ask Xero. But one of the core features we launched this half, for example, is auto bank reconciliation. So what is that? That means instead of Xero, being a software that assists you in, coding your transactions, you can now log into Xero and you can just see a tab that says reconciled. I mean, the agent did it on your behalf. So that's spending hours of time saved on our software. And remember, our software originally took out hours and hours that people were spending manually. So this is a step function change and even the ability to reconcile your transactions. That's a very good example of the type of features we're launching.
And given you're at the forefront of this type of technology, right? And I know you wouldn't have had time to look at the RBA report out today, but top line, it basically says that Aussie businesses aren't meaningfully introducing AI beyond using digital assistants like Copilot, ChatGPT. What would be your message to businesses, especially small businesses trying to integrate or use AI effectively?
Yes, I think, well, I maybe a couple of recommendations. First of all, in your software stack like Xero, you are going to get native AI features in a trusted, secure, safe environment, right? We hold your banking data today. We hold your transactional data. We hold your cash flow data. So first and foremost, look to get value out of the software that you already are using in your stack. Increasingly, you're going to find AI features there. And so it's like lesson number one, if you're a small business owner, you're like, how can I get value from the things I've already paid for, or where I already have trust and security and privacy? That's like the first thing I would say. And it's not just Xero. I mean, you may be using Shopify or, something else in your software stack. So first of all, I think you want to go have AI where the work is being done in a secure, safe environment. That would be job number one, particularly on things that you really care about the security of, like your financial data. Now, remember, every small business, just like I'm a CEO, I'm also a consumer. I use ChatGPT. I think we'd be foolish to think that small business owners are not also consumers. And so, of course, like for horizontal tasks, if it can help you ease your day by giving you a web query or a summary of tax laws, by the way, that's now also in Xero. We've made it easy for you to even search for things on the open web that OpenAI provides, or now also inside of Xero. But of course, you might go to those platforms for, a light help or horizontal questions. I think you have to expect that that's consumer behavior, but I would distinguish that from like complex workflows where you really need your data and the functionality to be in the same trusted environment.
Two final questions. What does your research say about the way Australian small businesses are feeling at the moment, especially as we come to the end of a series of interest rate cuts, which increasingly looks like they may be coming to an end, and as inflation reaccelerates?
Interestingly, we just ran XSBI, which is the Xero Small Business Insights Report, and that looks at our data to get a view of the economies in which we operate. And what it tells us is Australia small businesses are seeing a modest recovery in their sales growth. So actually, XSBI would indicate that perhaps the Australian small business is faring a little better than it did last year.
And finally, from my understanding, you're based in San Francisco, and as you mentioned earlier, you've made that large $4 billion acquisition in the States. Are there any types of insights you can offer about how the US economy is performing, what you're seeing on the ground, and the uncertainties given this long US government shutdown, which looks like it's finally ending?
Yes. Well, look, interestingly, again, when we look to the macroeconomic indicators in the US, one of the things that people would say is like, look, the economy has held up despite tariffs and a lot of other kind of looming threats and uncertainty. And when we look at the National Federation of Businesses, NFIB, their index indicates that, believe it or not, despite uncertainty, which small businesses are saying they feel, the optimism index for small businesses is still near an all-time high.
That is Xero CEO Sukhinder Singh Cassidy there. Let's take a look at the Australian share market now. The S&P ASX 200 down 0.5%, 8,753. Sectors ended mixed. 9 of the 11 were lower. Information technology by far the worst. Also weaker today, property, telco and energy. Doing well, materials and health. And of the best and worst performing stocks, the likes of IGO, the best performer, up 15%, Domino's Pizza 11% firmer, and Liontown Resources, the lithium miner, up by 10%. The worst performers include Xero, the market not liking the update, down about 9% by the close. GrainCorp off by 11%, and Drone Shield, the worst performer, 31% weaker. For more on the day's market action, I spoke with Zoran Kresovic, market analyst at Blueberry Markets. Zoran, the ASX really tumbled today after that jobs report. So to what extent is the market now discounting the chance of a rate cut?
Well, there was a bit of a surprise today with unemployment data that's come down to 4.3%. We expected a market consensus of 4.4%. And for the prior month, in month of September, it was actually at 4.5%. So, with the economy being so running so strongly, and labor market being, so punchy, we are expecting less than 20% now that we will get the interest rate cut in the month of December. So if you're asking me as an analyst, it's a no cut, and it's probably highly unlikely that we will get any interest rate cuts from RBA for an extensive period of time, or in fact, actually, we might be coming to the end of the interest rate cycle in Australia. But nevertheless, the one the investors should be focusing on is the RBA minutes, which is coming through on November the 18th. And I think tonality from Michelle Bullock, the RBA governor, will provide a lot more clarity and pathway where are we going to over the next 3 to 6 months.
How's all of this being reflected in the share market today? Where are the losses, for example?
Yeah, I mean, based on this news, we've seen ASX absolutely tumble, around 11:30 onwards. On the close, we were down 110 points. So approximately 1.3% ASX actually was down. Out of 11 sectors, 9 sectors have been actually bearish, or they were down for the day. And only materials has actually elevated, to the upside, with healthcare as well. We've actually seen some of the sectors like interest rate sensitive sectors or cyclical sectors, such as real estate, getting absolutely smashed. We've also seen tech sector down, financials as well, with all 4 major banks being actually down for the day. And that's obviously playing on the overall market sentiment being quite bearish.
Okay, I think ANZ, for example, is down today as it went ex-dividend too. These general losses in the market came despite an end to the extended US government shutdown today. How's this being viewed by investors?
So, if you have a look at it historically, and for a moment, I do want to focus on the, S&P and US market. If we have a look at the last 20 government shutdowns in the US from around 1979 up until today, we can actually see the S&P 500 has generally performed quite bullish and quite well, as soon as the government shutdown has been actually, come to an end. So historically speaking, S&P 500 has actually performed 1.2% to the upside within 4 weeks from the initial government shutdown end. And on 3 monthly basis, it's actually been up 2.3%. So if we are going based on the historical numbers, then we are likely to see that, bullish sentiment continue in the US markets. And hopefully we can actually catch some of that on ASX as well.
Okay, there's a bit of company news about today. What caught your attention?
There's been quite a bit of news actually today, but one company that caught my attention in particular is Orica. Orica has done exceptionally well for, the reporting season. If you have a look at the earnings, the earnings are quite substantial. They've been 541 million, so very healthy number. The company is actually looking really, really well at the moment, and it's looking really, really well for the investors as well. Unfranked dividend at the moment is sitting at 31 cents. For the financial year 2025, that will be up to 57 cents, which is 21% more than what it was for the prior year. Earnings have been substantial. The company is doing quite well, and year to date, Orica has been up 42%. Today has been one of those days where majority of the stocks on ASX have been actually, beaten to the woods. Orica is actually been one of those as well. Overall, I'm quite bullish on this stock, and I think it's a good stock to hold in your portfolio.
And finally, what are you telling your clients right now? Where do you see the opportunities for investors?
So looking at, the seasonality aspect, and I do keep mentioning this, second part of November and December generally tend to be quite good for ASX or global equities. However, we do have a number of risks that are associated with that. We got, global geopolitical risk that's unfolding. We've got, AI, technology stuff that's moving as well. So for me, most importantly, when talking to investors and traders, is being able to diversify your portfolio, and basically try to protect yourself against any potential downside or elevated market volatility. Volatility index right now is not overly too high. In fact, actually, it's come back within the range what it has been, over the past, within 2025. So But still, having some, gold and silver in your portfolio is really, really valuable because you're actually protecting yourself against any unexpected market turbulence that might come into the market. But overall, I'm still actually quite bullish on global equities, ASX, materials in particular, and some of those other sectors that might actually perform well. Such as things such as some of the stocks that could be doing quite well in sectors such as healthcare.
That's Zoran Kresovic there from Blueberry Markets, and he wraps up the podcast for this Thursday. Don't forget, if you enjoy it, to give a rating or review on Apple Podcasts and Spotify. Click that subscribe button or the bell so you're alerted whenever the podcast comes through. I'll see you tomorrow.
This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.